Hey, good evening, everyone. Thanks so much for giving me your time this evening. I really like the Sunday webinars because we're not rushed and I can sort of really do a thorough review of what I'm going to show you. I mean, as far as I know, this is the first multi-time frame Laguerre that's ever been created. And when you see it, I think you're going to find it to be extremely impressive. Now, I'm going to start with some oscillator basics. And I know that for many of you, this is going to be redundant. And I'm going to try to move through it pretty quickly. But for a lot of other traders, they may be in the room for the first time. And so I want to, to give them the benefit of this information as well. So start with the mandatory disclosure that all signals and trading opportunities provided both orally, written or electronically to disclose to visitors, subscribers, or for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures of Forex markets, nor for any profits or losses that may be incurred. I think we all know that there's a substantial risk of loss if you trade, and trading is not appropriate for everybody. Careful consideration of your financial position should always be made prior to trading. And here at Right Line, we're not registered financial advisors, and we are not licensed commodity trading advisors. With that said, I'm going to go over some things that are going to be redundant, but like I said, I do want to give everyone the benefit of the information. That is one of the first indicators that were ever created, along with MACD, was the oscillator. And the oscillator was created by George Lane. And I believe, I haven't looked back recently, but I believe it was around 1957. And I've already talked about how this guy, George Lane, was really a genius. He created this indicator at a time when there was no sophisticated charting programs. I mean, there was very little. Think back how far that is. In 1957, I mean, there was nothing around. And it's really amazing this man was able to make this association really with in an environment where charting was such a difficult endeavor. I mean, this is where guys used to sit in a big room and in their broker's office to see a ticker, to see the ticker symbols cross. I mean, because there really wasn't any kind of sophisticated charting, even rudimentary charting, I believe. And what he postulated was that momentum, or speed of the price of a stock or any financial instrument, changes before the price itself changes. And he believed that to be true because momentum is a second order derivation. And these are all his conclusions. This is why his main thing was looking for divergence. So what he felt was that the role of the stochastic oscillator that he created was used to foreshadow reversals when the indicator revealed bullish or bearish divergence. The signal is first, and then price will follow. And that's the only type of signal he looked for when trading an oscillator. He did not look to trade in the direction of the oscillator. He looked to counter trend trade the signal based on the fact that momentum was a forward-looking tool, and that momentum would wane before the price did. Now, what he was referring to is that as the price of a security rises, momentum normally increases. Now, when we talk about momentum, when we talk about being a second order derivation, what we're talking about is the speed with which the security rises. Or, better than talk about speed, we should talk about velocity, which is the rate of change of speed over time. So that if a security is rising at a constant speed, its momentum is flat. If a security rises over a faster and faster speed, then momentum is going to increase. So what he was looking for was price moving up fast, faster, fastest, and then looking for the speed or acceleration of that price move to the upside or downside to wane. This will be manifest as momentum, and momentum would turn first before the price of the instrument fell. So if we look at the oscillator calculation, we see that this is for the stochastic oscillator. And if you look at RSI, and if you look at Williams percent K, they're all really variations of this basic formula that he created. And C is the most recent closing price. And L14 is simply the average of the previous 14 trading session lows. And H14 is the average of the previous 14 period highs. As the close of the candle approached the high of a move, then momentum is increasing. When the close of a move approached the low of the candle, momentum was increasing. Because if the close is approaching the low, you know that price is accelerating to the downside. If the close of a candle is approaching the high, you know that price is accelerating to the upside. Now you also know that if the close continues to remain at the same distance from the high, momentum, there is no forward momentum, but price can continue to rise. So what his theory was that once acceleration came to a halt, to the upside or to the downside, and you got divergence in momentum, you would see the financial instrument collapse or rise, depending upon the direction of the divergent signal. Now, here is a good example of divergence. And if you've seen this before, it's not a bad recap. You can see this is a double top. Now, price came back up to the previous high, but it accelerated up to this high more slowly. It didn't accelerate into this high as fast as it accelerated into this high. So that's divergence. It shows that there's a decrease in momentum as this price made this high. And what George Lane's theory was that when you hit this double top with a divergence signal where the oscillator makes a lower high, showing that momentum is diminished, it's going to be associated with a collapse in price. Now I just pulled a chart of crude from January, and you can see that price is making a higher high. This is also divergence. Momentum here is making an equal high. So price is moving higher, but momentum doesn't accelerate, or the price doesn't accelerate faster on a higher move. And that is also a signal for divergence. And you see that it signals a nice drop in price. Now, if you traded divergence signals, you know that they're really a disaster. I mean, they work sometimes and they don't work other times. You can never predict when they're going to be successful or predict when they're going to be unsuccessful. And when you have a signal like that, where there's no way to assess the associated risk of an entry, then it's an entry that you just can't use. And if you look at any protracted long move, you're going to see continuous counter trend traders on a long move taking one or two candles short, and the move they just get run over. a couple of candles, you'll see short traders come into, they're calling a top. And that top is based on stochastic divergence or oscillator, or I'm sorry, MACD divergence. One way or the other, they're saying this is as high as the market's going to go. I'm going to fade it or counter trend trade it. And I'll tell you 80% of the time they get run over. Now here's another example. It's not a great example of divergence failure, but you can see you have equal highs here. The stochastic makes a lower high. And although price does fall, it doesn't fall much. And then it just rises right back up. So it's not a great short signal. Now here's the way you would want the oscillator to work in a perfect world. When the market was overbought and the oscillator line crossed below the 80 line, you'd get a short signal and price would fall. When the oscillator was oversold and it crossed above the 20 line, you'd get a long signal and it would rise. Let's just move over here so you can see it. Here's the oscillator line crossing above the 20 line, and you get a long signal and price rises. Now here's a short signal that does not work. Here's a short signal that really does work. A long signal up that works. And a short signal that's, on the right edge. We don't really know what's going to happen. But you can see how many of these entries were successful. Now, this may have been true in 1957, but what was true back then is simply not true anymore. The markets change, and our market, and the way we have to trade, is really taking a substantial left turn. Now, again, here's a better example where the oscillator goes overbought, 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 and price keeps getting higher and higher and higher and higher. And every trader caught in the counter trend direction simply gets run over by price going higher and higher. Now, why does this happen? Why doesn't stochastic divergence, as George Lane predicted, work anymore? Is it really important that we ignore it and don't take it into account when we trade? Now, I know there'll be some traders in the room that are going to say, I took a divergence signal and it worked great, but too many of them fail. Just as double tops, a lot of them fail. I mean, all these patterns, I personally do not believe it's possible to call a top. And I'm going to show, or a bottom, and I'll show you why. Now, back when oscillators were first developed, there was essentially little to no institutional volume in the market. I mean, the market was totally driven by commercial traders. And what we're saying is that the power of every buyer was approximately equal to the power of every seller. And this is the same thing with Japanese candlestick formations. I still like them, and I still think they're relevant and help with trading, but they just don't carry the power that they did before. And I know there are a lot of companies that have you trade Japanese candlestick formations alone or look at them, but I can't think of the vast number of topping patterns. Why does this happen? And the reason is that institutional volume now dominates. Depending upon the market, up to 80% of your of total volume is comprised of institutional volume. And institutional volume is going to determine the direction of price. Now, I've drawn up my own set of trading rules based upon the fact that we're in the era of institutional volume, and the fact that institutional volume is only going to comprise an ever-increasing percentage of the total volume of most financial instruments that we trade. I mean, as we move out into the future, if it dominates now, I just think it's going to get worse and worse and worse. So what we have to ensure is that we're trading in the direction of institutional money. We're not trying to fade it. The first is there is no such thing as overbought or oversold, at least as far as an oscillator is concerned. I believe this is now a fallacy. When an oscillator is between the 80 to 100 line and it's stuck up there, it's technically overbought, and you should not want to go long. But that's in fact, you're going to see the best place to go long, because that's where institutional money has pushed the oscillator assessment up and pinned it back, sort of pinned its ears back. Now, 25 or 30 years ago, we would want to fade this market. But today, we want to trade in the direction of institutional money. So forget overbought or oversold based on any oscillator assessment. And markets are going to reverse direction totally at the whim of institutional money. Now, there's always going to be the mathematical axiom that price is always going to want to revert to the mean, and it still applies, and it applies strongly. But the concept has been skewed, because there will not be a reversion to the mean until institutional money steps aside. As long as institutional money is driving price up or driving price down, it doesn't make any difference how far from the mean it goes. Now, the farther it goes when institutional money steps aside, the faster it may snap back and head back to the mean. But we can never know when that's going to happen. And if we make the assumption that it's at any given point in a long or short move, we're going to get run over multiple times, because nobody knows exactly when that's going to happen, and nobody can directly track what the institutional traders are going to do. So essentially now, trading divergence is tantamount to trading against money flow or institutional money. You simply cannot trade it, because you're taking a counter trend trade against the flow of the big traders we want to be on board with. And you can only trade in the direction of money flow, which is essentially the institutional traders. So the oscillator has taken on an entirely new role, but one that we can leverage to make our trading a lot better. Now, we have to look at which indicator most accurately assesses buying and selling pressure, completely ignoring any potential divergence signal. And with it, since it is a very good momentum assessment, we are indirectly following the footprint of big money. And this is what our entire workspace is set up to do. We can't know exactly where the institutional traders are going to start or stop a move, but we like to be just like a half a step behind them, following in their footsteps. Now here's the Laguerre. Now the Laguerre has a gamma, which modifies its sensitivity and specificity, its speed, and has multiple filters. And of all of the oscillators, it's the most modifiable. And it really has a very, very unique formula. Now, I just wanted to show you some basic Laguerre entries. This is not a multi-time frame assessment. This is just our regular single time frame assessment. And I just want to make the point with these slides that the Laguerre, as an oscillator that makes a momentum assessment, can work on any time frame and on any financial instrument. I mean, these are basic principles that are universal across any stock, future, or forex. I mean, all we're looking at is four relationships: the open, high, low, close of every formation. And we need those four parameters in order for the oscillator to work appropriately. Now you can see this Laguerre entry right here, and it's simply the cross of the Laguerre line above the 20 line, telling you that momentum is with us on the trade, and you get a long signal. And this green is the lock long, where the Laguerre sticks to the top, and it's essentially at 100, and it just stays there. Now, this is where we believe you get the best trades. And 30 years ago or 35 years ago, here is where you would get the best counter trend trades. Now, you could take this move all the way up. It depends upon your exit. You could exit on an arrow here, or you can exit on a break of support. It all depends upon your risk tolerance. The key, though, is you're in the trade in the direction of momentum as defined by institutional money. This is a 30-minute of the Qs. Here's a short, and here's a 60-minute of the Qs. Here's the short oscillator signal, the Laguerre entry arrow, and then we get the lock short, always trading in the direction of momentum, and down we go. Now, trading against the Laguerre, as we define risk on our trading, is really, really dangerous. Now, there are going to be some moves that rotate around, and the Laguerre will not be with you. These are the trades you have to stand aside on. You want to wait for everything to align. And the longer I trade the market, the more I see you have to have patience. And you really have to totally erase, FOMO, or fear of missing out. Because if the trade doesn't comport with your trading rules, it's always best to stand aside. If it goes on to become a winner, you shouldn't care about it. It didn't align with your trading rules, which is basically your trading Bible, and therefore you don't take the trade. And in order to trade with this kind of precision, you're going to miss some winners, but you're going to sidestep an enormous number of losers. And I'm telling you, that is what trading is all about. It is never about the number of winners you get in a given week or month. It is always about the number of losers you pull in. And the more conservative you trade, the less losers you will pull in. And maybe you'll lose a couple of more winners, but there's always going to be winning opportunities, and there's always going to be a million losing opportunities. Sidestepping those are the key to really becoming a first-class professional trader. And here's another move. There's the arrow and the move up, and this is a daily. So I wanted to just start off, because I always get a question: does it work on futures? Does it work on Forex? Does it work on stocks? Does it work on different time frames? These are universal forces that move price, and it does not make any difference what you trade. Now, again, your entry here, your exit could be the arrow, or it simply could be a break of support, where this breaks the 15. It all depends upon your risk tolerance. What I'm not trying to do here is define for you a trading methodology. What I'm trying to do is get you into the trade at the appropriate time in the direction of institutional money to give you low risk entries that allow the trade to run and have a very, very low chance of you getting stopped out. Whether if you're trading the Q and you're trading 100 shares, whether you take 33 off at a point here, 33 off at a point here, 33 off at a point here, that's your trading methodology. And that's really, really beyond the scope of this lecture. This lecture is just to get you into the right direction and not get you stopped out. Now, here's another move. Same thing, though. It looks a little more complex, but it's not. Here's the oscillator short. You can see that Laguerre crosses the 80 line. And you've got yourself a really nice short move. Now, here's another one right here. Crosses the 80 line. And you got another short move. Now, I just wanted to define some trading principles that I basically run my life by. I consider trading long below the 50 a counter trend trade. When price is below, when the 50 and the 15 are below, when price is below the 50 and the 15, you have to trade short. When price is above the 50 and the 15, you have to trade long. So no counter trend signals are ever taken. And you can see how bad the counter trend signals are and how great the signals into the trend are. This is what we're doing. And we're stating that when price drops below the 50 and the 15, the bears are in control because that's something that the institutional traders have done. And when price is above the 50 and the 15 crosses the 50 to the upside, that's when the bulls are in control and we're looking for long moves. So that's a market structure component that's really important. I mean, we can't trade without market structure. And the 50 and the 15 provide us with great market structure. Now here's another move. And here's what I wanted to do. Just wanted to give you just a brief glimpse of why the Laguerre, as we've modified its assessment, is so far superior. And in this particular case, I believe this is stochastic. I have one slide that I kind of misplaced that showed the Laguerre versus the stochastic, RSI, and Williams K. And it is without a doubt the best assessment. And if you look at the oscillator signal here, this is the Laguerre short. Now, stochastic gets you in quicker. It gets you in here, 2 candles earlier. But look what happens on this candle. The stochastic line crosses the 20 line to the upside, signaling a potential long move. And it's got to take you out of this trade if you're going to trade these signals. The Laguerre stays locked red all the way throughout this move. It is not buffeted by small moves in price. It's a very smooth momentum assessment, and it keeps you in a good trade all the way down. And you actually don't exit until you get a Laguerre long arrow. So you would get bounced right out of this trade real fast if you used a stochastic assessment. Now here's RSI. I did the same thing with RSI. Now RSI in this long trade here, here's the arrow. Here's the Laguerre heading up. We've got the price above the 15 and the 50, and you got a great long move. RSI is just in the middle. Now I think RSI is 70 and 30, but it provides you with no entry here at all. Now, if you're trading divergence, here's your divergence signal. Price is making a higher high. The RSI is making a lower high. And look where price goes, 2 candles. Now, someone's trading this signal. Someone's trading this divergence signal because you got 3 candles down here. You've got sellers taking the market down 2 candles here if they're trading this RSI divergence signal. And we're never going to take this divergence signal. First of all, we don't trade short above the 50. And second of all, the Laguerre hasn't given us a short signal. And in fact, any retracement taking into a locked Laguerre green is simply a way of taking the market long again. And here's another Laguerre long on this arrow right here as the Laguerre crosses above the 20 line, giving you another long trade. So the Laguerre assessment is really good and far better than RSI, stochastic, Williams K, or any of the others. Now here's just one more example. Now I believe this is Williams percent K. In fact, I know it is. Now it gets you in faster. Here's the cross of the Laguerre line across the 20 line, and you don't have to guess. This is a indicator generated up arrow that occurs intra-candle. You can see it flickering, and you know that if the candle closes to the upside, it's going to print, and it's never going to leave the chart. Nothing ever repaints or changes. So you've got a long move here. The 15 is just about crossing the 50 to the upside. Price is above the 15 and the 50, and up you go. Now, here's the problem. With Williams percent K, you see how it drops below the 20 line, I'm sorry, the 80 line here? Would take you out on these two candles. If it didn't take you out, it would take you out on these two candles. But the Laguerre is locked long, and you aren't going anywhere on this trade until the Laguerre comes off and crosses the 80 line, which is right here on this down arrow. So you get this entire move. I mean, momentum here kind of shrugged off. You can see it moved, but it stayed above the 80 line, and that's all we care about. And as long as it does, our momentum assessment, our Laguerre line stays green, and we're going to stay in the trade and let it mature all the way until price falls off. And you can see this heralded a complete collapse in price of the market. Now, I'm not going to go, I think, I'm not going to go over these. I think I'm going to go right to the indicator. I mean, this just really exemplifies what I've been telling you, is that we want to take the Laguerre signal long, and we want to stay with it as long as it locks long. And our exit here would be this down arrow right here. Now, this is just based on one indicator and how it can augment whatever methodology or additional indicators that you may use to trade. And we don't need that. All right, that's the offer. I'm not going to show you that right just yet. In fact, I think it's the wrong offer. It's the wrong one. Hold on here. I don't even know where I put it. It's disappeared. I'll have to tell you about it. Hang on one second here. Now here's a real chart, and here's real time. Now here's the multi-time frame assessment that we do. Now the upper bar is the first time you will ever see, or probably have ever seen, a multi-time frame assessment of the Laguerre. It uses two higher time frames. Now, the thing about an oscillator is what we like to do is we like to eliminate price from our trading chart and simply use the higher term time frame. But with the Laguerre, we cannot do that. We have to use both the higher term time frame assessment and the assessment on our trading chart and wait for them to align. And when they do, you get stellar entries because you got momentum in your direction on a multi-time frame basis. And that's what you want. That's how you trade. Now, I'll show you a classical setup, and there are a couple of variations. Remember, we do not counter trend trade. So don't worry about these long signals below the 50. We're only going to look at the short signals below the 50. I just don't want to take a trade. I just don't want to look at a setup at 4:30 in the morning uncrewed. Let's take it during a trading day, and I'll show you the signal. Now, I want to show you just a classic entry first, and then I'll show you some of the. Now, take this arrow right here. Now, this, remember, is the Laguerre on your trading chart. That's the upper line. And this tells you when the Laguerre on your trading chart locks short. And what you want to do is make sure that the lower line, or the multi-time frame assessment, which takes into account the arrows and the lockdown, is red. And when you get those both, you really do get stellar entries. Now, right here is one of them. And all we need to do is, what we want to do on an entry is make an assessment of risk. That's really the important thing. Now, depending upon your risk tolerance, you can take this trade and stay short all the way until the long-term time frame changes. Now that's a big risk. You can see you're going to get a gigantic move down and then you're going to give some back. Less risk is to exit on your chart time frame up arrow. So you get a move like that right here, down to here, and you're out on this up arrow right here. We can go through the chart and we can look at these signals and you'll see that almost none of them fail. Now remember, it's a very specific signal. You're not going to see it that often. And when you do, and this is the classic signal, if you take it, the probability of getting a winner is extremely high. And here's another one right here. Your chart is coming into alignment with the longer term time frame assessment. And when it does, and you take a trade, you have a very, very low risk, high reward entry. Now I'm going to show you some other potential entries. I just want to show you the easiest and classic entries. You have an entry right here. And as soon as you take this entry, well, actually you don't. I apologize. You don't have the longer term Laguerre. It's yellow. And you just have to step aside. But I'm going to show you later how you can get this move. Here's your entry right here. You've got your longer term. There's your entry on the oscillator signal off your chart. Now, it's going to be very tough to find a loser here. There's another one right here. The arrow tells you that here's your shorter term, even though it looks like it may not be, looks like it may be green here. It has crossed the 20 line. I'm sorry, the 80 line. And here's another entry. Those are your classic entries, and they're going to work for you over and over. When the gear on your trading chart gives you a signal in the direction of the longer term multi-time frame assessment, I'm telling you, the signals are incredibly good. Even right here, you get a long signal in the direction of the longer term Laguerre. Your trading chart pops you an entry. And this is not that low risk because it's coming significantly off the 50. And we want to trade tight to the 50. I like this trade better. And up you go. And we don't look at counter trend signals. Now here's an entry right here where you have to deal with an immediate pullback. And occasionally you're going to get a reversal candle. But then look at the move. No, I'm sorry, you don't have an entry. I'm sorry. You don't have that longer term Laguerre. You can't take this trade. Here's your entry right here. There's your longer term multi-time frame Laguerre assessment right here. And here is the entry based on the Laguerre on your chart telling you momentum is long. They all have to align. And when they do, I'm telling you, I'm going to defy you to find a loser. Now, I want you to know that what you can do, and it's very, very reasonable, is that what you can do, blah, 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 is this. Let's say you get the start of a move. And I've looked at these, and again, it's very difficult to find a loser here. You have a trade short right here, and you have no entry. There's no short Laguerre arrow because the Laguerre never got to overbought. So you're not going to get a short arrow. But right here on this candle, you've got both your chart Laguerre and the multi-time frame assessment Laguerre locked short. So any pullback here allows you to move right into the trade. Let's say you missed that. Here's your crazy traders. They're calling a bottom, and there's no way this is going to be a bottom. You simply take the continuation trade right here on the dual Laguerre signal. Now you're aligning here to the downside on 3 time frames. Your trading chart and 3 higher time frames. So it's really tough to get stopped out because this only occurs when institutional money is playing. And look right here. There's your pullback. Now this you can take short right here. So you have a short entry here. And you should not exit on that reversal candle. You should take this move all the way down. If you happen to get stopped out, you're right back in the trade. Right here. Now let's just look at one other market. You can see it's a very simple indicator to use. You simply wait for the 3 Laguerre assessments to come into alignment. This lower line is the higher 2 time frames, and the upper line is your trading chart Laguerre. And you can see that assessment. This is the Laguerre line of your trading chart. And we tried to make the line assess multiple time frames, but there's a big problem with that because it's stair steps, and it's just an impossible assessment to do. This bar takes away all of the difficulty and is extremely accurate. So let's take a look at the E-mini. And then I'll look at whatever charts you like. There we go. We just have to change the input here. This is a 2, 4, 8 assessment. Our bars are smaller, and I'm thinking of making them even smaller because volatility on this market has not been so hot. Now I may have to reload all historical data here. It's loading. Now we looked at all different ways to project this data, and this is by far and away the best way to project it. Hold on, still loading. Our internet speed, for some reason right now, is very slow. My son, who's in his bedroom, has been bitching at me all morning or all evening about how slow the internet speed is, and nothing I can do about it. Here we go. It's loading slow. There we go. So here's the E-mini. We're going to look at the same thing. Let's just take a look. Now, this is in the middle of the night. I mean, this is a great trade. But let's take a day a day of trading where the market's open. and see how we would do instead of looking at, like, 4 o'clock in the morning. Now, here's your short trade at 9:09:10 Eastern, right here. It's a terrific short trade. The multi-time frame assessment is short. The Laguerre on our trading chart gives us a short signal. And eventually it locks short. So let's say you're really worried about losing money. Get this move and get shaken out by these two up candles. You see that you have absolute ability to re-enter the trade because you're entering on a locked Laguerre down. So you get yourself another winner. And let's say you're not going to endure a reversal candle. You're out. Well, then you just take the next candle down and you've got another trade. Now, this is right before the market. Oh, actually, this is the market open, 9:38. If you got these three moves, depending upon the number of contracts you traded, you're done for the day. But here's your next trade right here. There's a Laguerre on your chart giving you a down signal into a short multi-time frame assessment. And down you go. Forget these counter trend signals. There's another trade. Now, how many winners in a row do you want on the E-mini before you're going to pack it in? I mean, if you hit your profit target, you're gone. And that's another winner for sure. So you've opened the market with 1, 2, 3, 4, 5 winners in a row. And this trade is a really nice long trade. This is not a scalp trade here. This goes 4 3/4 points. And in today's E-mini, that is a big move. I mean, this is a more modest move. But you see on this move down, look at the, and this is, I think, really important that I want to, the Laguerre is, you put the wrong thing in here. And here's your ability to avoid losers. On this move down, you, first of all, you can take this trade short. Remember, you've got the long-term time frame in your direction, but you don't have your trading chart. And look at the direction of the Laguerre on your trading chart. It's moving up. And it saves you from taking this loser right here. And it's the same thing here. The Laguerre has no definitive direction. At best, it's flat. Worst, it's trading against you. Here's your perfect trade, where the Laguerre is taking a nosedive into the trade. So you can see how the Laguerre doesn't just mimic price. It's creating its own momentum assessment based upon the programmed formula. And it really has significant value. I just had to scream into the bedroom. Now, we can keep going. Already at 1400 hours. Now, we just don't have a signal here. I'm not sure why we don't here. Our chart Laguerre is locked short. Obviously, we don't have our longer term time frame, so we don't trade. And unfortunately, you're not going to get every winner. Here is your short trade right here. Is it a home run trade? No. But is it more money in your bank account? Yes. And does it come with any kind of significant risk? And no, it doesn't. So it's a terrific trade. We're not going to counter trend trade. Now here at night, this is 1959 hours. So, I mean, it doesn't matter. There's no volume here, and no assessment done by any indicator is going to have any value when you have no volume. Since these are sentiment indicators, you have to have traders to create to create sentiment. So let me just go to one more really quick. I don't know if the stock is set up. Let me see if I can get a QQQ here. I don't know, but I'll tell you, it trades exactly the same. Let me just quickly go to stocks. Where's the NAS? Here's the NASDAQ 100. I don't know if the Qs are going to be on here. Let me see if they are. They're not. Let me just put up a common stock, and we can look at it. Of course, you can definitely day trade stocks like this. I just don't want to put up a really expensive stock that nobody can afford to trade unless you're leveraging it against an option. And let's just take the S&P 500 instead. We'll look at applied materials. All right, I'm sorry, I don't have a stock data feed. But I want you to understand, here's the Dow, that the forces that we're looking at here are totally independent of the instrument that you're trading. It doesn't make any difference whether you're looking at the Dow, the NASDAQ, the Qs, the SPY. It has no relevance because all the indicator is looking at is momentum. Momentum is a universal force that moves price. It doesn't make any difference what time frame you're looking at. This is always going to assess your trading chart. And if you come aboard, I'm going to show you. It's super easy how to modify this line to create your multiple higher time frame. Sergio created a really, really neat input. It's very, very easy to manage. If you trade a 5-minute, you're going to look at a 15-minute and a 45-minute. It's a really, really cool input. It's very simple to use. So it doesn't make any difference. It really, really doesn't. So let me just show you the offer. And since I don't have it on a slide, I'm just going to type it here. It's a really, it's a very, very small, it's a very pithy offer. Now the Laguerre one time frame is $2.99, and our multiple time frame is still $2.99. I mean, if we can make it better, we're not necessarily going to jack up the price. And so that's the cost of the indicator. Now, let me cancel that. I don't know how to make it bigger. I'm not a big, here it is. I'll make it a little bit bigger, and I'll answer any questions that you have. It's Arial 20 point. I'll make it a little larger. And I'll make it 36 point. And here's the thing. The first 10 who purchase will get a, will come into the trading room for a month with me. And we're going to kill it. And I just want to write that in just so it's clear. Of course, I'm getting apoplexy here. Hang on one sec. So first, and we have over 200 people in the room, and of which I kid you not. So I can't write it, but the first 10, I don't know why, will come into the room with me for a month. And that's the offer. I mean, it's just as simple as that. So let me answer any questions that you have. Now remember, if you own the Laguerre, you're cool and don't worry about it. If you don't own the Laguerre, you're going to get this at the same price as we did the single time frame. We debated a lot whether to increase the price and decided for now we're just going to leave the price the same as the individual time frame. And it's really a much, much more powerful instrument. Anytime you do a multi-time frame assessment, it always adds significant power to your trading entries. And it's really going to filter a lot of losers for you and get you into winners. So like I said, and this is the last thing I'm going to say, is that sometimes there's going to be a winning trade you can't get into. But if you have FOMO and chase these trades, you're going to wind up chasing them into a brick wall. So just stay very conservative with the system. You're going to get the 15 and you're going to get the 50. And I just want to mention really briefly, these are very, very unique lines. We made them ourselves because we never like what's handed to us and everybody else uses, because what our goal is to optimize a closed system. And an EMA and an SMA, I don't think work well on a Unorenko chart. Now, the other thing I want to mention too is you don't have to trade Unorenko. You can trade time, you can trade tick, you can trade range. Remember, these again are universal forces. I displayed Unorenko because that's what I trade. But you can use a 5-minute. I showed you all those slides on a 30-minute, a 60-minute, a 1 hour of the cues. It doesn't make any difference the kind or style you trade. If you want to trade hourly bars or 2 hourly bars, it doesn't matter. The momentum assessment remains just as relevant irrespective of the time frame you trade. So that's not even an issue. Now this line is a 50 EMA of a 50 EMA. It's the first one, as far as I know, that's ever been created. And what it does is it creates the speed of a 50 EMA with a lot more stability. It doesn't get jockeyed around by price. This line is a 15 EMA of a 15 EMA. You'll not find this anywhere because, as far as I know, we made it 15 EMA of a 15 EMA. And it was our way of trying to get the speed of an exponential with the stability of a simple. And we got it. You'd be really surprised how well this does not get knocked around, especially the 15. It's a very stable line. Sometimes in the face of a wobbly market, it stays green. See on these 4 candles down, our 15 EMA stays green. I guarantee you the EMA turns and actually reverses direction. I'm not going to bother to put an EMA up here, but I can guarantee you it does. So I've looked at this for so long. You want a stable line, and that's what we've got. So that's the platform, and that's the price, and the first 10 will get that. We'll get that month in the trading room. And really, even if you don't trade futures, I trade the E-mini. I trade the NASDAQ and I trade crude. You're going to get a tremendous feel for the methodology that we use and the way we trade and how we're going to leverage this Laguerre. Now, I'm showing it to you on NT8. It'll be out on NT7 in about a day or two. So if you want to trade it on NT7, it'll be about 24 hours. This time we decided to format it first on NT8. We always do everything first on NT7. NT7 is the easier of the two to make it. So I think it is on NT7. I'm not positive, but if it's not, it's 24 hours away. You'll get it on Monday as soon as Sergio swings in here. So let me answer any questions that you have. Hang on one second. I'll just read them all out. Okay. Hang on one sec. I mean, there are a lot of questions. I want to get to all of them. Okay. No, Brian, we're going to do it on both. Hey, Robin. Hey, Jeff. Okay, so you're correct. You're correct. The rate of change of speed is acceleration, not velocity, and Sin is completely correct. I totally agree with you. My nomenclature was wrong. I hope, though, that my explanation was correct. Velocity is the same as speed. Acceleration is what we're talking about. I completely agree with you. It will be, the webinar will be recorded, Tim. Yeah, stochastic divergences, Mark, and long trends are a disaster. Really, they just really are. Yes, the algo machines are the institutional traders for it. Just give us a call, Christopher. You know, okay, let me just keep going here. Okay. You know something, Rob? I would love to do it. If you would like to see that, just give me a call on Monday, and I'll put you on my workspace, and I'll show it to you. I'll show you a daily and intraday of advanced micro devices. No problem with that at all. I mean, you will be impressed with it because the momentum assessment is really a good one on any time frame and any financial instrument. So if you just give us a call in the morning, Roy will give you time, and we'll use TeamViewer, and I'll put you right on the workspace. Rather than right now, hook up a stock data feed, and I'll be happy to show it to you. Okay, Jeff, I'm not sure what you mean. Okay, is the 50 an MA and 15-minute or 15 AM that has just been mentioned? I'm not sure what you mean by that, PK. Can you just retype that for me? It's just not clear to me. I'm sorry. Yes, that is what we trade in the live trading room, Vishal. Good, Daryl. Very, very good. I can't give you an exact figure because it's on NT7, which is what I trade in the room right now. Okay, Arthur. I mean, I'll show you Uncrewed. I mean, a perfect entry during the trading session. It's really easy to do. I think when you asked that at 6:34, I may not have done it, but hopefully I've done that since. And I agree. You want to look at the market during trading hours, and not like at 3 o'clock in the morning or 4 o'clock in the morning, because it really is not when you're going to be trading the market anyway. Or should you trust any signal? So let's just take a look. Now let's just take a classic. Now Friday, crude oil was awful. Now here's an entry right here. Now it's going to get you a first target. Now this is at 7:42. It's a little bit early. Why don't we do one that's right in the meat of the trading day? Now I also want you to be careful and look for a bad signal, which is just as important. Now right here, this is a 1, 3, 5. This is a 6-tick move. I think it's 6 or 7. Our first target 7. So this may, well, you see, you don't have the long-term Laguerre, so it's no trade. I mean, it's really going to protect you. Let me look for a really good trade. Here's one right here at 9:04. Doesn't have to be. I don't necessarily have to look for a big home run. It's not important. What you want is a low risk, potential high reward trade. It's right here. This is at 9:04. Very eminently tradable, and you get a nice move. It's not a blockbuster trade, but who cares? All that matters is what's the associated risk when you enter. And you get 11 ticks, which is not a bad move. The Laguerre gives you a short. You're trading into a long-term Laguerre that's telling you to go short, and there's your great entry. You can take it also here, right here. There's the Laguerre arrow. There's your short trade, and this one's bigger. Now this is right at 9 o'clock, and again, it is tradable. And down you go. And this one goes 11. Get a two 11 tick moves. I mean, I'll take those any day on Uncrewed. The key is they're just low risk, potentially high reward trades. This could have gone 25 ticks. We can never tell how far they're going to go. All we can assess is risk on entry. The risk on entry here was exceedingly low. The multiple for the higher time frames, Howard, if you're trading time, it's times 3 times 3. So if you're trading a 2 minute, you're going to be looking at 2 times 3 is 6, times 3 is 18. If you're trading a Unorenko, you're going to be looking at, this is a 2 Unorenko, you're going to be looking at a 4 and a 6. If you're trading a tick chart, you're going to be looking at the 2 higher fib numbers. So if you're trading, say, I never can remember the number, but if you're trading whatever the fib is, it's going to go to the 2 higher fibs. The same with a range chart. If you're trading a 13 range, it's going to go to the 21 range and the 35 range automatically. You're gonna have to change the input, but it's really easy to do. So that's the multiple, and that 3-time multiple or fib multiple really is, I'm telling you, the best. We've looked at 2 times, we've looked at 4 times. 2 times is too fast, 4 times is too slow. That's the longer term, Brian. I actually just mentioned it for Howard. Yeah, listen, you have to sometimes take a fairly large stop, but here's the thing, Arthur. You really don't get many reversal candles on entry. I mean, if you take this trade, you're going to see that very few of them give you that reversal. I mean, if we look hard for a very, very, like right here, there's no reversal here. You're up. Now, and again, if you're out here, and this is a nice move, I'm not going to scale it. It's maybe 14 or 15 ticks. Oh, you can't take the trade. It's not a trade. I'm not looking at the longer term time frame, and it's not with us. Now, here's where you can take the trade. It's the move up, and it's the retracement right into the dual Laguerre assessment. This is at 11 o'clock in the morning, and this is a confirmed trade. And there's your home run. No reversal. We actually want to trade off the reversal. I know there are occasions where you're going to get a reversal, but it's not common. Just like that. You get the pullback into the dual Laguerre lines. And the chances that you're going to get a continuation long are very, very high. And the reason I want to spend a lot of times on the charts is a lot of times in webinars, they just bog you down in JPEGs. And in JPEGs, I can show you whatever I like. I mean, I can cherry pick the trades and cherry pick the entries. You're seeing this is a chart. And I'm pretty much telling you what we would enter and what we wouldn't, what we can enter and what we cannot enter. And you see right here on this move up, look at the Laguerre. The Laguerre is sloping down on our trading chart right here. Now this makes it barely, but it's a very poor trade. And here's another place where you get saved right here. And I think I just found the first loser. Can't take that trade. But here's an entry that finally does not work. That's the first bona fide loser I found right here. And I don't want to ever represent that there aren't going to be losers. That'd be ridiculous. Now, the thing about this move here is you should be in here and take this trade up to here. And then it does get a little bit choppy here. I mean, this is a tough go. This is not going to go very far, and this is not going to go very far, and this is not going to go very far, and this one's going to give you a nice winner. So you're not going to get 100% winners, and I'm not shy to show it to you or to represent to you that you're not. I mean, you're going to take a loser or two. Now, here's the reversal you were talking about, right here. I mean, that's a nice, no, so you can't take it. The longer term is not green. So it saves you from this reversal, and you have no trade here. And here's your perfect short, and then you get right back into the rhythm. If 80+% of your trades are winners, you're going to make an immense amount of money. And nothing is choppier and more difficult to trade than crude. If you can continue to get upwards of 80% of your entries winners, you're going to make great money, and you will take losers. But not the date. Can you give the date? Sure. The date right here is 2/20. These are all very recent because I've only set the chart to look back to look back 12 days. So they've got to be within 12 days of today in terms of trading days. So they're all very, very recent trades and setups right here. Yes, Rob, we're going to put this in the auto trader for sure. We're going to want that dual Laguerre assessment because you can see the enormous number of, let me just show you this move. Here's a trade short. Can't take it. Look at the longer time frame Laguerre. Short, can't take it. Short, can't take it. Right here, you just saved 3 losers in a row because the longer term time frame Laguerre does not give you the ability to go short, short, and short. And that's what you want right here. This goes 3 ticks. This goes 1, 3, 5. This does make it. It makes 7. This goes 1, 3, 4 ticks. 2 losers with a just made it to the first target because your long-term Laguerre is not with you. Then as soon as it's with you, you can take your first pullback and take it down. So and remember, this is not a trading methodology. I just want you to see how accurate it is and how important it is to have it with you on your trading along with anything else that you have. It's just a single indicator. I don't have any pivots here. I don't have order flow. I don't have multiple other things that we use. Just on its own, though, I want you to see the tremendous validity it adds to whatever trading methodology that you adhere to right now. It's going to benefit it. You can never get a trading methodology off of one indicator, but you can see it's going to hold. If you use it to censor trades, it's going to stop you from taking a lot of losers. And if you use it to validate an entry, that validation is of significant value. That's an indicator that's really helpful and tells you it has forward-looking ability. Multi-time for analyses always have great forward-looking ability because momentum looking out into the future is where price is going to move. Sure, I'll take a look at that, Mark. Let's look at the RTY. Let me add it. Let me add it really quickly to my control here, and let me add the RTY. New. Instruments. Let me put it here. Right here. Okay. We should have the arc. We should have it here now. Whoops. Don't want to do that. You know what? All I had to do was go to futures and RTY. Where the heck is it? I just added it. Hold on a second. Let me do it one more time because I want you to see it. Hold on a second. I don't know why it's not there. I just added it. Instrument list. Let me go. Hold on. Instruments. RTY. Futures. Okay. Let me just click it and see if it's going to work. Because it should come up. New chart. I don't know what's wrong. I cannot get it to come up. I have no idea why. I'm sorry. If you'd like to see it, just give me a call tomorrow. We'll put it up. I have no idea why it's not working. I have an RTY feed, and I really apologize. I just don't have any idea why. I don't want to drop this and go to NT7, but I have no idea why I can't show it. I'm really sorry, Mark. I think you would see a great RTY. I just can't. I don't know why it's not coming up. Let me see gold. Futures. Here's gold. All right, let's take a look. Now here's a long signal, and it's a valid signal. Now, unless you're gonna take these pullbacks, it's not gonna go anywhere. Right here. Now, hold on one second. I'm sorry. I also have to change, I believe, the inputs. Hold on one second. Let me make sure if these are right. This has got to be a 2, 5, 10 on gold. Let's reset. Here we go. All right, so here's your entry here. And that's a loser. Right in the face. Even though you caught this move up appropriately, it just gives you these 2 down candles like this, and it does nail us. Now here's a long move that does work. It's not a huge move. And here's your beautiful, well, you don't have the long term. Can't take it. And here's your short term right here. Now gold is choppy. And you have to endure an up candle. And if you can endure two, you get the whole move down. Again, I'm giving you a trading direction. And here's a perfect one. Even though you need a slightly bigger stop. The size of the reversal candle comes on 13 ticks. So you would need on this, you would need a 14 tick or 15 tick stop to stay in that trade. Here's your perfect trade short. No hesitation, straight down, huge winner. Here's your perfect move up, no hesitation, straight up. Here's your perfect trade short, right there. Let's keep looking. You can take that trade long. It's a retracement into a dual Laguerre. There's your Laguerre signal long. And that's another winner right here. You can take that trade long. Long-term Laguerre is with you. It's another winner. Let's see if we get this big move. Don't get it. The long-term Laguerre is not with us, and it's at 20 hours, 2000 hours. It's just not a trade. Let's go to the morning. And there's our trade. The retracement into the dual. Here we have no trade, even though it works. There's our retracement into the dual right here, right here. Gold is tough, but you're going to get multiple winners. Again, you are going to get losers, but I'm telling you, you're going to get an 80% or better on win percentage. Right now, the platforms is NT7 and NT8 RK. Now, if you don't trade either one of these, you can run a demo with a demo feed and take the signals off of it. I mean, right now it's so difficult. We're almost on we've almost caught up on Sierra. That's the only ones we have right now. Now, I would defy any single indicator to give you signals even remotely approaching the precision of this indicator. One, because the Laguerre on one time frame is excellent. On a multi-time frame assessment, it really is superlative. And remember, it's just one indicator. Oh, thank you so much, David. Yes, we're going to talk tomorrow, David, for sure. And thank you for the happy birthday. I really appreciate it. Yeah, I don't know what it is, Gene. Very slow right now. Okay. For the arrows never repaint, and the arrows appear in real time. Nothing on our system ever repaints, ever. If you get an up arrow that fails, it's going to be staring you right in the face. And these occur intra-candle. So if you get this this up arrow, let me just find one here where you would take a trade right here. No, you know, the long term. Now, let me find it. Right here. No, can't take it. I mean, this is not a trade now. I can't take that either. I mean, this is a beautiful short entry. Look how tough gold is. This is a perfect short right here, and it fails. And if you're stopped out by one up candle, you're going to lose the trade. And then if you go back in and you allow yourself to have a runner, you're going to sweep that loser away. But I want to find the, for the arrows, what you're going to do is it's going to flicker intra-candle. So you know that if the candle closes to the upside, you have a trade. You simply put your buy stop one tick above the close. If the candle then collapses and doesn't close up, the arrow will disappear because the Laguerre is not going to signal along, and your trade is canceled. If it does close up, the arrow paints and stays, and you're in the trade one tick above the close. You're always going to get plenty of heads up. No, it doesn't appear instantly. It will flicker in and out, Dan. Brian, there's no longer a longest time frame. It's up to you. You can swing trade on an hourly, a 4-hourly, a daily. I mean, I have traders in Asia who trade daily bars. I mean, they stay in trades for a long time, but they've got a lot of money. I mean, I don't really recommend holding a future overnight because of the potential for massive losses. But these guys hold. And if you look at orange juice futures and lean hogs and things like that, traders will buy those and hold those for months. And they take big risks, but I think they have inside information about the orange juice crop or about soybeans or wheat. They'll take long-term positions for a long period of time. I don't think we should do that. Yeah, I'm sure we'll get great Dow signals. I can show you that. This is the last market I'm going to show because I want to get through all the questions, and there's still so many of them. Just wait for it to load. Okay, here's our Dow, and no trade here. Now yesterday, so Friday, we didn't really have much of anything, honestly. We had no entries. Zilch. Zippo on Friday. Let's go back. Yep. See, you have no entry. Nothing. And here's where you get them. There's your retracement into dual green for your long. Oh, you know what? I see what the problem is too. This is a 4, 10, 20 for the Dow. So this is tonight. So if you look at the Dow, we don't have a trade. We don't have the long term. Now we could take any pullback here, right here, right here. Well, right here would be your pullback in continuation. You don't need a down candle. You just need a pullback. You've got the longer term, and look at the slope of the chart, straight up. And this is a nice Dow trade. This is a 4-unit rank up. Here, this is a winner. This is 4, 8, 12, 16, 17 or 18 ticks. Here, you just lose that long term for a heartbeat, and you can't get in. Right at the open, it's real choppy from 9:30 to 9:31. But I don't recommend trading the open. I don't ever do it. And this is at 3 o'clock in the morning. We won't look. There is no short, and there's your short right here. Just a gorgeous short. And that's a huge trade. Let's see here. Boy, this is mega chop. Now that's a loser right here. And then the trades get censored all the way across. You can't take this long, and you can't take this long. This one, that long term and the Laguerre, just for a minute align. And you're going to take you out. I'm not going to hide that. Here you have no short, censored. This short, don't have it. Here's your short, right here. pullback and continuation. Nothing here, nothing here. There's your gray short right here. Or here, for sure. Now for every loser, you're gonna get 4 winners. Or for every 10 trades, you're gonna get 8 winners. I'm telling you. Yes, you can change the multi-time frame, Brian, on the Laguerre. Yes, John, this is NT8 that you're looking at. Yes, just call Rory Ford. No problem with that. Well, listen, historical and real-time data is never the same. Jean, as best as we can see, if I sat with you and tried to show you the assessment of an indicator on the right edge of a chart, you'd have to spend the entire morning with me. And it's just not feasible to do. Now, I sort of don't agree with you. I mean, I think this is tracking the real-time movement of the market at any given time pretty accurately. So I have to, and this is not a Renko. This is a Unirenko. I do not trade Renko because I want wicks. And remember, if you remember the oscillator formula, you need an open, high, low, close. And that's why the wicks are mandatory to trade. Unirenko bricks will not create an accurate oscillator assessment. And I honestly, I'm not going to swear I'm right because a lot of traders have proven me wrong, but I think this is a pretty accurate assessment of what was taking place on this day at this time. I may not be perfect, but I think it's you know, to within a small degree of uncertainty, pretty accurate. No, you know what, Arthur? I mean, that's smart. But the 15 of a 15, what we do is not the actual. We use the 15 of a 15 and then run it through a strainer, and when we're finished with it, it comes out as moving a lot like the 15 but smoother. It's not 15 times 15. And if you want, I'll show you the formula. I can't access it, but Sergio can. Yes, Han, it does mean that. Good evening, DR. Yes, this is NT8, and it's available on NT7. Yes, I wanted to show it on NT8 because NT8 is always the one that we do second. This time we did it first, so you're good. I purposely opened NT8 this time up, and if you look here, these are all our NT8 charts. Well, they've disappeared, but those are our charts. But a key component is our multi-time frame Laguerre, which we're going to be formatting. 299, correct. It doesn't work with Thinkorswim, and I have to tell you, you know, pardon me if I don't pronounce your name right, Srividya. But Thinkorswim, the only thing that advantage you have with Thinkorswim is that we have an API. We can take your Thinkorswim data feed, bring it across, and it will run NinjaTrader for you. So you can run NinjaTrader forever at no cost. You download a demo of Ninja. We hook it up to Thinkorswim for you. And unfortunately, what you're going to probably have to do is move it off into the corner somewhere, you know, and make it a smaller part of your platform. But you can trade every signal right off of it. You know, you can use it to censor or get into a trade, and it costs you nothing. because the Thinkorswim data feed powers it. And that's a really good API. The Thinkorswim data feed is great for Ninja. Just call us, David, or send us an email. Okay, I'll tell you what that is. Yeah, what this yellow line, it's called fractal energy. And I've looked at the formula, and really what it is it's sort of an ADR ADX component of volatility. And what you're supposed to look for, I don't put much stock in it, although I have to tell you every now and then it really does call a trade. But if you look right here, if this yellow line is rising into a trade, it's supposed to indicate that the potential for a big move is there because it's a volatility measurement. But I just really don't think it has much precision. I was thinking of just taking it out because we don't really use it to trade. This is not an oscillator cross here. A Laguerre doesn't have that component to it. And you can take it out if you want. But since it doesn't bother me and it's kind of a curiosity, I leave it in. But that's all it is. It's supposed to be because look at this move up here. The fractal energy is just flat. So I don't think it really has a significant amount of validity, and I would not use it under any circumstances to modify your trades. And you can always make it transparent and eliminate it. And let me tell you, you're not going to be missing anything. Again, TradeStation, Brian, you got to bring the data feed over. The API will run NinjaTrader forever. And 7 or 8, and you're going to have to take the signals off of Ninja. We're just not, someday I hope to be, that's the more people at every webinar I do ask me about Thinkorswim. Oh, you will get a TradeStation? We don't. And it just, that's when you're going to have to take it off a demo. We're just not there yet. Yes, it's a different formula, Brian, than a standard Laguerre. If you overlay a standard Laguerre with this, it will not track the same lines. We've changed the delta, the gamma, and we've changed the filters. Thank you, John. Our pleasure, John. Thank you so much. Thank you so much, Phil. God bless you too. Thank you so much. No problem. Just yes, James. You just call Rory in the morning, send us your NinjaTrader ID. We'll get you all set up. And thanks so much for coming aboard. Thank you, guys. Thank you, Rob. Okay. Rian, you would have to tell me the instrument, and I could give you the settings. Like if you would like to try to mimic a 60-minute with a Unirenko, you have to give me the volatility of the instrument. So in other words, the setting to trade a 60-minute of Amazon would be different than trading the 60-minute of, say, advanced micro devices. So you can, this is the only right way to do it. You have to optimize the inputs for the expense, based on how expensive the stock is, but more so on the volatility of the instrument. So if you just give us a basket of stocks and the time frame you want to trade them, we'll give you the optimized inputs. And that's a great question, by the way. Okay, you'll be geared, Mark. And you're very smart, and you were completely right. And I took linear algebra in college, and you are completely correct. And I found linear algebra to be very difficult because all we did was vectors. I had vectors in my brain. It's a great instrument for the DAX. And if you want to see it, just give me a call. Brian, just give us a call and we'll take care of that. Okay, question is, what were you showing listed 50 and 50, or just say what you mean? I'm just saying that this is a 50 EMA of a 50 EMA. This is a 15 EMA of a 15 EMA. The way we've created the formula, and this might be the best way for me to show it to you. Let me just show you an EMA right here. I'm going to put it in. So I'm going to put in 1. Let me make it really thick. And you watch how it moves up against our EMA. And you see how these two candles push the EMA down, where our EMA stays extremely stable. This is where I'm talking about. You see these multiple, these are retracement candles. Well, this almost reverses the slope of the EMA. Our EMA stays very stable. So what we're looking for is stability, but look what happens in a trend. Our EMA tracks the standard EMA almost exactly. It's very tough to get speed on the one hand, but added stability on the other. The same thing with this 1, 2, 3, 4, 5 candle retracement. This pushes the slope in the opposite direction on the EMA. It does on ours too, but to a much lesser extent. And even this single candle gives the EMA a bump. Our indicator, which is under it, doesn't even flinch down. So it provides you with a more stable assessment of support and resistance, and also short-term momentum, because that's what an EMA or an SMA do. They're assessing momentum. So, and again, look right here. Look how this thing just racked the EMA. Doesn't rack ours. It turns it up. It's a big retracement. That's what we're looking for: speed and stability. And so I think that's the best way of showing you the difference between the two, PK. Ty, just send us an email. Okay, that's it. I think you're going to get a lot. You know, I think you're going to get 3 to 5, Scott, on the NQ. Of course, it's going to vary from day to day, but the NQ, I'm telling you, I trade it. It's never about getting winners on the NQ. It's filtering the losers. I mean, I have days where I get 13 and 14 and 15 points on the NQ and don't make money, because you've got to filter the losers. And this will really help you do that. And you're going to get plenty of entries. Never worry about the number of entries, really, especially on something as volatile as the NQ. Man, that thing is a rocket ship. Sure. You just go to the, hang on one second, because I want to just fix it to make it easier for you to see. And let me go to the long term. Let me find it here, if I can. It's nice. Modified slow, modified fast. Okay, here it is. Or you just drop this to tick, volume, range. So let's say you're trading a 3-minute. What you're going to do is you're going to put in 3 times 3 is 9. You're going to put 27 and minute right in here. It's just that easy. It's very, very simple to do. And now for some reason I can't bring up Unorenko, but Sergio just coded that in. So that's exactly how you do it. It's really, really an easy indicator to change. Brian, yes, we'll give it to you, Brian. Okay? And you're such a good guy. Okay. I always place my stop tick placement, Jean, on a reversal candle. I mean, I'm a very conservative trader. We have our whole automated trade management strategy already programmed in. And I would prefer, although sometimes it's not optimal, I would prefer to lose my trade on a single reversal candle. And if it just wiggles me out, I'll go back in on the same candle and try to make my money back on the same formation. That's my stop. Is the reversal. Now, that doesn't make it right, but it all depends on your risk tolerance. I mean, you can take the reversal and a couple. I had a trader send me the way he trades this very differently than the way I do. He's a little bit more of a scalper. He's all in or all out. You know, we scale in and scale out. His stop is much tighter, and he's looking for a smaller move on 3 contracts, and he's in and out, and he's making a ton of money. So that's just the way I do it, and I'm looking at the way he trades. I mean, a lot of traders show me really, really good things, and I'll tell you, we lost 3 or 4 trades last week on 14 tick moves, and our first target's 15 ticks on the NASDAQ, just by 1 tick, which on the NASDAQ is just basically like a whiff of smoke. So he's a little bit more conservative than that. So because we're looking for 15 ticks and then a second target of 7.5 points. No, we've never sent out the multi-time frame on. You do not have it. What comes with the offer, Michael, is both time frames, the whole Laguerre system, the 50 and the 15. I mean, the arrows are all part of the system. If I open it up, I can show it to you. Now, I'm just going to get rid of the EMA because obviously that's just, you get the modified Laguerre signal B, which is the trading chart, the Laguerre, which is the actual right here, the line, signal A of the arrows. Now here's the modified slow, the modified fast, and here's that line that does the multi-time frame assessment. You get all of that. If you see it here, you get it. Okay, so just to make it absolutely clear, I'm not going to show you anything or proffer a trade with any tool that you're not going to get. And Ty, I just said, all you need to do is send us an email and you're good. Okay? All you have to do is change the setting here to range, and you're good to go. That's all you need to do. Go to your data series, which I have, and change this to range. And on Uncrewed, let's see, on the YM, let's try an 11 range. Now here's an 11 range. You can see it's a lot choppier, but it's still going to work. Let's find an entry. Right here is your pullback to dual green and your move up. Right here is your pullback to dual green and your move up. These are all counter trends. There's your perfect Laguerre arrow. Now, unfortunately on here, you don't have the longer time frame, so you can't take the trade. You have to wait for a pullback and up. And this is a gorgeous trade. Now, it's in the middle of the night. I'll give it to you, but it's at a consolidation on a pullback right to support and the move up. You're always looking for an entry right off support on a pullback or a consolidative pattern right into dual green. And trading a range, I think, is a little more challenging, but you can get great entries. It does not matter. Now, this is a little riskier on a continuation. I don't think I would take it. There's your up Laguerre arrow. It's not a trade though. So you can see, you can trade it extremely well on range. You just wait for the pullback into the dual green. That's all. You don't have an arrow, which you don't. You can't take the trade. Just wait for the pullback. On the dual green, you'll get the continuation. Okay, thank you, Justin. If your Laguerre panel has a cyan and yellow, you know what, Han? I don't know. You're just going to have to give us a call. We'll take care of it, okay? Remember, David, on the Unarenko, if it's a Unarenko 2, you're gonna trade the higher time frames are a 4 and a 6. It just seems to work. Listen, it's a matter of trial and error. I mean, the fact that the time frames looking at the 11 range is not a fib. So what you're going to do is it's going to default to the closest fib. So the closest fib to an 11 is a 13. And the two higher time frames are going to be 21 range and 35 range. And that's what's going to give you the longer term assessment. And just based on a lot of forward testing, it works out to be really, really good. I mean, there is symmetry in fib numbers, and that's what we look for. And for the time, it's the 3 time frames higher. 2 minute is a 6 minute and an 18 minute. So the Unarenko is a 2 Unarenko, 4 Unarenko, and 6 Unarenko. Believe me, it's going to make that long-term assessment very, very valuable. Okay, let me see that. RTY. Let me go to the, you can see that this is not my forte here. Let me go to instruments, futures. Let me just go to search. I see what you're saying. RTY. I have to put that into a list. Now, you know, I know I'm looking really dumb here, but I just don't know how to do it. I mean, I've been trading NT7 for the past 500 years, and I just don't know. I'm really sorry. I'm really sorry, Sen. I just do not know how to do it. I'm sorry. Well, it says it's loading. Let me see what happens. There it is. Hold on a minute. Don't ask me why it had worked. Let me just set it back to a Unarenko. And hold on a second. And we can look at the RTY. Let's take it out of range. Go to Unarenko. And the RTYs are 2510. Here it is. Now there's your long, right there. Long-term time frame is green. Chart signal valid. You don't have a short here, unfortunately. Here, you've got your, these are a little risky. These are pullbacks. No, they're not dual green. Here's your dual green, and here's your only long. Now here's a great signal right here. Don't have the long term, so you can't trade it. Just miss out here. Just miss. Don't have it. You can see that the RTY is a lot tougher. Let's keep looking. Boy, this is a tough one. Hold on. Make sure that setting is right. Tick trend, open offset, and tick reversal is at 2510. Let me go back a few more days. I don't see really great entries on the RTY, I'll tell you. I don't see any losers, but I don't see any great entries. Let's just go. I mean, that's a terrific entry, but I don't see very many more here. Oh, that's an entry right there. This is not an entry. Now I don't see any. Again, no losers. I just don't see an entry. I'm not going to make one up. This is a great trade, and there's just no validity. Let's see. Yeah, it really is hard. This is a tougher. This is a much tougher assessment. Now here's a short. It's not much of one, but it's a winner right here. Here's another short. It's not a big trade, but I don't know how far. This is going to be 1, 3, 5, 6. This is going to be 1, 3, 5, 6. Small trades. No confirmation here. Look at that. I just don't. Let me just take a look at that longer term Laguerre. It should really be okay. Where's the long? Hold on. No, it's just not doing it. It's not giving us an entry. Let me look here. Nope. 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 Now here's an entry right here. There's the Laguerre signal. And the short. Got the longer term. Right here. Here you don't have a trade. There's another trade right here. And short. Here you have nothing. Now this is a trade you can take. It's not that conservative. It's a pullback and continuation. It's not ultra conservative, believe me. There's a gray short right here. There's another short right here. Not a big trade. The only thing I mean, you get trades. You don't get a million of them. The thing I don't see it picking up is losers. And that's the most important thing. I mean, to trade this alone, I think you're not going to get an abundance of entries. But as an add-on instrument, it's a good instrument. Right here, you have no trade. Long-term censors the trade. Now, right here, you don't have a trade either. because the fast Laguerre is against you on the trade, even though the longer term is with you. The fast Laguerre is in oversold territory, so you can't trade it. So it does censor a lot of losers. And here, no, your longer term is just not there. I mean, it's obviously a choppy market on 3 time frames. And here's your beautiful trade right here. There's your wick and your move up. It takes a little bit of time. I mean, you're going to get nice trades. And the important thing on the RTY I can see is you're just not going to get very many losers. I mean, I think I really couldn't find one. And I'm being totally sincere. So I'm glad you got a chance to see it. No, I got it, Sin. I got it. Finally got it. Thank you, John. Thank you so much. Thank you so much. Thank you, Arthur. Were you, Scott? I'm using it exactly the way I showed you. I'm using it with Unorenco. It's going to be formatted into the platform on Monday. We're going to look for trades in which the long-term Laguerre confirms the direction of the short-term Laguerre. Along with the quant and everything else, it's going to make our trade entries that much more valid. And it may cost us a couple of winners, but it's going to really allow us to sidestep losers. So we are going to incorporate it into our trading. I only want to trade in the direction of the long term when the short term swings into that direction as well. If we get a pullback, I will take it. If we get an arrow now, I'll take it as long as the long term is in my direction. So I'm going to consider it a very important component of our trading. Mark, that's not included in this one. That's all. Time charts, RB, I can put them up really quickly. Let's go to time. Hang on here. I'm losing my marbles here. Okay, here we go. Let's go to time. We'll go to minute. Why don't we do a 3 minute? And I'm not going to use the RTY. Let's take a look at that Uncrewed. A little bit of a better instrument. CL. Now here's what you have to do. You go to the indicators, and I put in I think a 2 minute, a 3 minute. So you're going to go to your modified multi-time frame. You're going to switch this to time, minutes, and you're going to go to 3, 9. You're going to go to 27 minutes. And there you go. Now here's the longer term right here. And Uncrewed, this pullback is your long trade right here. That's at the end of the day. We're looking for short moves here, and we just don't get one here. We have no oscillator signal short. Now here's our oscillator signal short. And that's not a bad move. Let me scale it. I mean, for me, it's more difficult for me to trade time. This is about 9 ticks. And you see the whole time here, you're just looking for short trades and short entries. That's all you can do. Right here is a short trade. Now, it's not a big one. I gotta tell you. Now here, this is a tough trade because there's a whole move. Well, you don't have the short term here. And here's your gorgeous trade right here. There's your long entry. There's your long-term time frame. And there's your killer move right there. That's what you're looking for. Here you have no entry. These are all down signals. Right here, there's another entry, another killer move, and up. So you can trade time, no problem. Yes, the moving averages come with it. No, you know what, Sin? You'd have to send us an email, talk to Sergio. We could potentially do that, and I would just find out how much programming time it is for him. That's all. My pleasure. Aside from the $2.99 RK, it should cost you nothing if you have NinjaTrader and you have a NinjaTrader account. If you have Thinkorswim, it will cost you nothing. If you have something that what you need is a data feed to power NinjaTrader. So if you already have NinjaTrader up and running, it costs you $0 to add this on. It's just an indicator on a platform that you already have. There's no recurring fee, no recurring charge. And if we change the time frames, increase the time frames, you get all the modifications, all the add-ons, all the upgrades. You always get those for free. We never charge you for that. So it really shouldn't be anything more than the $2.99. But it really depends upon your platform. If you're Ninja, Thinkorswim, it's nothing. You pay $0. I don't like to trade futures after hours. After hours, the futures market's controlled by just a very small number of psycho commercial traders. We want to trade with the big money on big volume with the institutional traders and get in right here, one hair of a footstep after them. And also after the market, and I used to trade after market, there's a lot of manipulation. I mean, they can see your stop and pluck it right out from under you. I mean, I can tell you some terrible stories on gold where, I was 4 ticks down on a trade with a 10-tick stop, and all of a sudden I hear stop filled, and I called NinjaTrader, and they told me that on the tape, it took my stop on a hair, but you couldn't even see it on the chart. Somebody just pushed the market up and just stole my money. So I don't like to trade during thin volume, and that's the same for Forex. I don't like to trade, thinly traded during thinly traded periods of time. Sure, Han, I will do that. I'll write a cheat sheet out for you. Oh, thank you, Brian. Happy birthday. Thank you much. Thank you, Han. Thanks for coming along. Great. You know what, David? We don't have the auto up yet, simply because we keep modifying our trading system. Sergio now has to program this into it. And it's not going to be long before the auto trader is running. And with all of this in it, it's going to be really hard pressed for it to take a loser. And it's going to trade a lot of markets. We're going to put it on bonds and notes, the 6E, the 6A, the 6B, the 6C. We're going to have it running on so many instruments. And we're just going to take the perfect trades where everything aligns with every single indicator. I mean, I don't think it's going to take losers very often, but now he's got to program the multi-time frame in. So just give us a little more time. I hope this coming week we'll have the NDT for NT8. Yes, RK, you absolutely get the Unarenko candles for sure. We have to give those to you because you need wicks. So you've got to get the right candles or the whole system doesn't work. So for sure we would give those to you. We can't, we're just a couple of weeks behind on Sierra, Steve. And right now, I can't give it to you. I don't want to promise you something I don't have. It's in the near future, but we don't have it now. I wish we did. We've got 85 to 90% of the platform in its totality on Sierra. Only we've lurched so far ahead now. In time we'll catch up. You know what, Ed? I don't know. First trade might be. If you just send an email to info@rightline or call Rory in the morning, he'll answer your question. I don't know about that. Not Option Wizard, but maybe First Trade. I don't know though. I don't want to give you incorrect information. You're right, Sin. We may want to do that on the RTY. I saw that too. I mean, the RTY, when we got an entry, it was real good, but it seemed like it was missing too much, and we may want to modify that. And there's an easy way to do it. Our longer-term time frame may be looking at too high a time frame, and we can close it down. I haven't really spent much time looking at the RTY. I've been looking at the NASDAQ, the Dow, the Forex, and stocks, and I really didn't spend much time on RTY. You know what, Greg? You'll have to call me. I don't have a Forex feed up. I will be more than happy to show it to you, though. I'll tell you, the Forex market on our system trades it exceedingly well. Now, I had a Forex trading room for many months, but I was getting up at 2 o'clock in the morning to trade at Eastern. And then I was trading the futures market, and I'm a single dad with a teenage kid. And basically, I was about ready to go into a coma. So I had to close the Forex room. But we did really well trading the same system you see here. I just could not keep up with it. Be happy to show it to you on any time frame that you like. No, it doesn't go on Thinkorswim, Arthur. Thinkorswim powers NinjaTrader, and it does it really well. So you can set up a demo of Thinkorswim. We'll bring your Thinkorswim data feed right into Ninja, and it will power either 7 or 8. So you can run Ninja for no money forever. Well, remember, Steve, the candle is going to occur intra-candle. It's not a signal on candle close. So if you look at this entry right here, you're going to see this arrow present when this candle is only a few ticks to the upside. That's all you need. It's going to tell you have a long if the candle closes up. Now on time, you don't know exactly where that close is going to be, so you can't set a buy stop. The only thing you can do is rush in as soon as it closes and this up arrow prints and get an entry as close to 1 tick above the close of the candle as you can. It's the best way that you can do it. Now, I don't want to bring this up, but we have an execution tool that'll do that for you automatically. It's called our NDT, and it's not yet ready for 8. It's way behind schedule, but we have it for NT7 and hopefully this week for NT8. All you got to do is press a button, and it will automatically execute the trade on the close of the candle 1 tick above. If you want to talk to us about that, it will, if you trade time or you trade tick, and you don't know where the close is until the candle does close, it's an incredibly powerful tool to get you in the trade quick. Yes, you can, Steve. Nothing repaints RK. We never do repainting here. These signal arrows do not repaint. If there's a losing signal, you see it. Once the candle closes up and the arrow prints, it never leaves the chart. And the only time it's going to be valid is on the candle close. You're going to see it intra-candle. Once it prints, it never leaves. I mean, you can go back 400 days, and the same arrows that were there 400 days ago are still there. Nothing repaints here. Yes, Steve, Steve, what I can tell you is you can get that tool. Just send us an email and Rory will show it to you. It's a really, really awesome entry tool. I'm not going to bring it up here, but it's called our NDT trade execution platform. If you press enough close, it will automatically get you execute the trade one tick above the close of the candle, exactly where you want it. And it's really powerful for if you're trading time or tick and you don't know where that close is. It's much faster than you can do it as a mere mortal like we are. Smart stop system that trails the market, have entries nailed. Hey, listen, I agree, Brian. That's one of the keys is nailing that trailing stop. For seasonals, I think it's going to point you in the direction of the seasonals, RK, because the seasonals are going to set up a nice trend for you, and it's going to be tracked by that longer term Laguerre. So I think it's going to confirm the validity of that. Yeah, I said I would, Han. I will do that. I'll write out a cheat for entries. Just give me a couple days, and I'll make a PDF. Okay. All right. Listen, guys. Thank you so much, and ladies. We're going 2 hours and 20 minutes, but I wanted to answer everybody's question. I wanted to show you different charts, different settings. I hope you like the indicator. I wouldn't proffer it to you if I did not think it had tremendous validity and tremendous power in helping you trade. I just don't send out junk. I mean, we spent a lot of time on this indicator, and I think it's of a tremendous benefit. My pleasure, Jean, really. It's great to have you in the room. I really appreciate it. So listen, guys, we will send you a replay. Have a great, great night. And I look forward to seeing you in the room. I mean, let's make some money, man. Okay? Oh, hold on. I can't give you time for that, Rob. I can't, RK, I'm just running. If you want to see him, I'll show him to you tomorrow. It's just too, it's right now, I'm just running too far over. I'll get that PDF. Don't worry about it. And thank you, Scott. I just hope that even if you don't come aboard, you've learned something and you believe and you honestly feel that this has been an educational period of time, that I'm just not here to proffer you an indicator. I really tried to give you a feel for the way the oscillator should be traded, and there's very little information if you look in YouTube on really how to leverage an oscillator in today's market. And I really think, hopefully you think it's really good information. So have a great evening, everyone. I wish you all the best of luck. And I really, really hope you guys make money no matter what you do. So have a great night, and hopefully I'll see you tomorrow. Bye-bye, everyone.